Stop what you are doing. Stop what you are doing. Close those chats, close the terminal, close analyzing the market. Stop looking for another strategy or another pattern that will make you rich the next week. I want to tell you something nobody else will. Your trading problems had nothing to do with your strategy. Nothing. Nothing to do with your indicators, nothing to do with the market. They have everything to do with you. Every failed trade, every blown account, every moment of frustration isn't happening to you, it's happening through you. It's happening inside of you. The market isn't testing your strategy, it's testing you. Today I'm going to show you exactly what's happening inside your mind that keeps sabotaging your trading, not some surface level psychology tips bullshit, no. I'm talking about the deep, uncomfortable truth about why you keep repeating the same patterns over and over again, every single week, every single day. I'm going to reveal the 8 invisible barriers in your mind that guarantee trading failure. These are not just mental blocks, no. They are deeply wired biological and psychological mechanisms that activate the moment you open a chart. Most importantly, I'll show you the one approach that actually breaks through these barriers. And it's not what you think, believe me. It's not more discipline, it's not better rules, it's not meditation or mindfulness, no. It's a completely different way of seeing the market that makes these psychological barriers irrelevant, just irrelevant. This is the foundation of my W3 flow system, a trading approach built specifically to bypass the psychological traps that destroy most traders. Now, let me ask you something. Have you ever taken a loss that you knew was coming? You prepared for it. You accepted it logically. But the moment it happened, you completely lost your shit. That's not because you are weak, it's because your body is treating that financial loss like a physical threat to your survival. When you take a loss, your body floods with cortisol. Your blood pressure rises, your thinking narrows, your breathing changes. This is the exact same biological response you would have if I threw a punch in front of your face right now. And in this state, your prefrontal cortex, the part of your brain responsible for rational thinking, literally goes offline. You physically cannot make good decisions in this state. This is why you do things that make no logical sense. You move your stop loss even though you know better. You revenge trade even though it never works and you know it. You hesitate on perfect setups even though they match your trading plan, right? Your conscious mind isn't making these decisions. Your survival circuit is. And it wasn't designed for trading. It was designed to keep you alive in the wilderness thousands years ago. The problem is not that you need more discipline. No. The problem is that you are trying to trade while your brain is constantly triggering false survival alarms. Have you noticed how winning feels good but losing feels absolutely devastating? There is a reason for this. Your brain processes losses with 2-3 times more intensity than wins. Scientists call this loss aversion, and it has written in your nervous system. Think about it. Your ancestors who were casual about losses probably didn't survive very long. The ones who freaked out about losses, who felt them deeply and did everything to avoid them, they survived and passed their genes to you. This means your brain is literally wired to make you a losing trader. Because good trading requires taking small losses unflinchingly while letting wins run, right? But your brain will fight this every step of the way. No amount of trading psychology books will rewire these circuits. You need something more powerful. The second barrier is your addiction to certainty. Your brain is not built for uncertainty. It's built for survival, and in survival situations, uncertainty equals danger. So what happens when you trade? An activity defined by uncertainty. Your brain freaks the fuck out, but it doesn't tell you it's freaking out. Instead, it creates an illusion of control. It tells you, just this once, move the stop loss. This setup is different, size up. The market is definitely going up from here. Your brain would rather create a false certainty than sit with real uncertainty. This is why you break your own rules. It's not lack of discipline, no. It's your brain trying to manufacture certainty in an uncertain environment. When you hold a losing trade, you are trying to avoid the certainty of a loss. When you cut a winner early, You are trying to log the certainty of a win. When you overtrade, you are trying to manufacture certainty through action. Your brain will always choose fake certainty over real uncertainty. And trading is nothing but uncertainty. You need to understand this. This is why even traders with perfect strategies still fail. Their need for certainty eventually overrides their strategy. This obsession with certainty explains why traders endlessly search for the perfect strategy, the holy grail, the strategy that works all the time. But the truth is, the hard truth is, such a strategy cannot exist because markets are inherently uncertain. Markets are made of millions of humans making decisions based on incomplete information about an unknown future. Uncertainty isn't a bug. It's the entire fucking foundation. So when you jump from strategy to strategy, indicator to indicator, guru to guru, course to course, you are not getting closer to success. You are just feeding your brain desperate need for certainty. And the solution is not finding certainty, it's developing comfort with uncertainty. Once again, the solution is not looking for certainty, not finding it. It's developing comfort with uncertainty. And that requires a completely different approach to seeing the markets. Every time you take a trading action, your brain physically changes. Neural pathways strengthen, new connections form, and the brain is literally rewiring itself with every single decision you make. And this is how habits form, right? The more you repeat an action, the stronger those neural pathways become, and the more automatic the behavior becomes. So what happens when you move your stop loss just once and it works out? You create a physical pathway in your brain. That's simple. And the next time you are in a similar situation, your brain will naturally want to follow the same path. This is why bad trading habits are so damn hard to break. They are not just behaviors, they're physical structures in your brain. When you take a panic action while trading, like doubling down on a losing position or revenge trading after a loss, that experience is emotionally charged. And emotional experience create much stronger neural connections than logical ones. This means your worst trading habits are physically hardwired to activate precisely when you need discipline most. And when you are in an emotional state, your brain will naturally fall back on the strongest pathways, which are usually the exact behaviors that have hurt you in the past. So how do you overcome all these? Most people think it's about information or motivation. If I just read another book, if I just find more discipline, if I just want it badly enough. But none of that works because you are fighting physical structures in your brain. The only way to change these structures is to create new neural pathways through repetition under pressure, through repetition under pressure, and not in paper account, not in a demo account, not in theory, but in actual trading with real money under real pressure. Once again, not in a paper or a demo account, not in theory, but in actual trading with real money and real pressure. And this is where most traders fail because they're trying to create new pathways while still operating in environments that trigger their old ones, which is crazy. What you need is a completely different approach, one that bypasses these old pathways entirely. I know this sounds insane, but from a neurological perspective, it's absolutely true. You trade for the chemical rewards your brain gives you, dopamine hits that have nothing to do with actual profits. When you enter a trade, you get a dopamine hit. When the trade goes your way, you get a dopamine hit. When you close a win, you get a dopamine hit. Your brain doesn't care about your account balance. It cares about these neurochemical rewards, and it will optimize for them, not for actual profitability. And you know what? The more dopamine you seek in your daily life, the more you will seek it in your trading. If you constantly check social media, if you play video games for hours, if you watch a lot of porn, if you consume a lot of sugar and processed foods, you are training your brain to seek constant dopamine hits. And when you sit down to trade, that same brain will look for dopamine, not profits. I want you to understand this. This is why the most simulation-seeking people typically make the worst traders. Their brains are wired for immediate rewards, not delayed gratification. The truth that nobody wants to hear is that successful trading should feel boring, very, very boring. Not exciting, not thrilling, just methodical execution of a process over and over and over again. The dopamine comes from the process itself, not from individual trades, no. It's the satisfaction of executing well, regardless of the outcome. But most traders can't handle this. Their brain are wired for excitement, for action, so they create action even when the market demands patience. They overtrade, they size up, they take setups that are not there, not because they lack discipline, no, but because their brains are starving for dopamine and will do anything, literally anything, to get it. The fifth barrier is your brain's obsession with creating meaning for randomness. Your brain cannot accept randomness. It's literally wired to find patterns, even when none exist. Researchers call this patternicity. And it's one of the most powerful biases in human thinking. This was great for your ancestors. If they heard a rustle in the bushes, it was better to assume predator than just the wind, right? But in trading, the same wiring is deadly because markets are largely random in the short term, but your brain cannot accept this. It just cannot accept this. So it creates stories, it sees patterns that are not there, it creates narratives to explain random movements. The market is manipulated. Their hunting stops. It always reverses at this time of day. None of these narratives are actually true, but your brain needs them to be true because it cannot accept randomness. Think about all the stories you tell yourself about why price moves. It dropped because of the news. It rallied because of support or resistance. It consolidated because of uncertainty. These stories feel good. They really feel good. They create the illusion that you understand what is happening. But they're just your brain's desperate attempt to create predictability in an unpredictable environment. The truth is much simpler and much harder to accept. Price moved because more people were willing to buy than sell, or vice versa. And that's it. All the rest is just narrative. Now, here is the painful paradox. The more you rely on these stories, the less you will see the market's actual structure. You will be so busy confirming your narratives that you will miss what's really happening right in front of you. The choice is between comforting illusions and profitable reality. Most traders unconsciously choose the illusions because they feel better. But success comes from seeing the market as it is, not as you want it to be. This means stripping away the stories and focusing only on structure. The sixth barrier is your identification with your ego, the mental image you have of yourself. Your ego wants to be right. It wants to win. It wants to feel smart and successful. And it takes losses personally. When you take a trading loss, your ego doesn't see it as a normal business expense, no. The cost of doing business is an uncertain environment. It sees it as a personal attack, a statement that you are wrong, that you are stupid, that you are a failure. This is why losses hurt so much more than they should. And it's not about the money, no. It's about the wound to your ego. And here is the critical problem. As long as your ego is involved in your trading, you will always choose defending your ego over making money. You will hold losing trades to avoid admitting you are wrong. You will avoid taking good setups because you are afraid of being wrong again. You will seek validation rather than profitability. The goals of protecting your ego and making money are fundamentally incompatible. You cannot do both. This is why so many intelligent, successful people fail at trading. Their egos have been rewarded their entire lives for being right. Once again, Their egos have been rewarded their entire lives for being right. But trading rewards you for being wrong quickly and moving on. Something the ego cannot stand. Now think about all the opinions you hold about charts. This is a good level. This pattern will break out. These indicators signals a reversal. These are not objective observations. They are your ego's attempts to feel smart, to demonstrate mastery, to prove that you understand what is happening. But the market doesn't care how smart you feel. It only cares about supply and demand, buyers and sellers, actual orders hitting the book. And the stronger your opinions, the more your ego is involved. And the more your ego is involved, the less you will see what is actually happening. True trading mastery comes from releasing the need to be right, something the ego can never do. The seventh barrier is the most profound. You never actually see the market itself. You only see projection of the market. Your fears, your hopes, your past experience all projected on the price movement. When you look at the chart, you think you are seeing a reality, but you're actually seeing a mirror of your own mind. You are afraid, you see threats everywhere, you are greedy, you see opportunities everywhere. If you've been burned by a pattern, you see the same pattern everywhere. Your perception is never neutral. It's always filtered through your psychological state. This is why two traders can look at the exact same chart and see completely different things. The chart isn't showing them the market, it's revealing them their own psychological state. It's literally a Rorschach test. Those ink blots psychologists use to assess your mental state. When you look at the chart and feel fear, that fear is not coming from the chart. No, it's coming from you. When you look at the chart and feel excitement, that excitement isn't coming from the chart. It's coming from you. The chart is neutral. It's just a record of transactions. Sell and buy and sell. All the meanings come from you. And as long as you are projecting onto the market, you will never see its true nature. You will never see its true nature. You will only see reflections of your own mind. This makes profitable trading systematically impossible because you are not trading the actual market. You are trading your projection of it. When you take a trade based on fear, you are not responding to the market, no. You are responding to your fear. When you take a trade based on greed, you are not responding to the market. You are responding to your greed. True trading success comes from seeing the market as it actually is, not as your projections make it appear to be. The eighth and the final barrier is the deepest one. Your core beliefs about yourself and money. These beliefs operate like hidden software running silently in the background of your mind. You don't see them, but they control everything. If you secretly believe you don't deserve success, you will find ways to fail. If you believe money is evil, you'll sabotage yourself when you start making it. If you believe trading is gambling, you'll trade like a gambler. These beliefs were formed long before you started trading, in childhood, in previous careers, in your relationships. But they determine your trading results more than any strategy even could. Now think about your beliefs that you hold about trading. I never get the big moves. I always get stopped out before the reversal. I'm great at analysis, but bad at execution. I'm unlucky in the markets. None of these are objective facts, they are beliefs. But your brain treats them as instructions. If you believe you always get stopped out before the reversal, your brain will find ways to make this happen. By placing stops in poor locations, by taking low probability trades, by interpreting normal price action as they are hunting my stops. Your beliefs become self-fulfilling prophecies. Not because the market cares about your beliefs, no, but because your beliefs shape your perception and actions. This is why no trading strategy can overcome limiting beliefs. You can have the best strategy in the world, but if you believe you are a failure, you'll find ways to fail with it. You will miss entries, you will miss stops. You will size too small on winners and too big on losers. Your beliefs will always find a way to express themselves through your trading regardless of what you are using. This is the deepest level of trading psychology, not just managing emotions or following rules, but examining and changing your core beliefs about yourself. So if these 8 barriers form a psychological prison, what's the way out? A pretty logical question, right? Most trading psychology advice would tell you to work on yourself, meditate more, journal your trades, develop more discipline, create better rules, follow your trading plan, etc., etc., etc. But there is a fundamental problem with this approach. You can't fix your psychology while you are still identifying with it. As long as you believe you are your thoughts and emotions, you will be controlled by them. The real solution is not through more psychology, it's through seeing market structure so clearly that your psychology becomes irrelevant. Once again, the real solution is not more psychology. No, it's through seeing market structure so clearly that your psychology becomes irrelevant. And this is the foundation of my W free flow system. And this system is not about controlling your psychology. No, it's about developing such clear structural awareness that your psychology naturally fades into the background. When you can see the markets through structure, what I call balances, auctions, context, time frames, top-down analysis, everything, you stop projecting onto the chart. You start seeing what's actually there. What was opinion becomes observation. What was fear becomes clarity. What was prediction becomes recognition. You are no longer fighting your psychological barriers because you are operating at a level above them. Now think about the difference between a pawn in a chess game and someone watching the game from above. The pawn is limited in movement, in perspective, in opinions, in options. It reacts to what's right in front of it. The observer sees the whole board, all the pieces, all the potential moves. The observer has clarity the pawn can never have. Most traders are pawns of the market. They react emotionally to every move. They're inside the game, caught in its swings. Structural awareness turns you into an observer. You see the game from above. You recognize patterns the pawns can never see. I'm not talking about becoming emotionless. I'm talking about changing your relationship to the market entirely. The W free flow system is built on this principle of structural awareness. We do not try to predict the market, we recognize structure so clearly that prediction becomes unnecessary. Most trading approaches ask you to predict what will happen next, but prediction triggers all the psychological barriers we have discussed. It activates your fear of being wrong, it triggers your need for certainty, it engages your ego's desire to be right always. The W free flow system eliminates the need for prediction by focusing on recognition instead. The foundational concept in W free flow is the auction principles and the balance structure. Most traders see consolidations or ranges as random noise or breakout opportunities, but they're missing the entire story. A balance is not just price moving sideways, it's carefully orchestrated auction with predictable phases that reveal institutional intent before major price movement. By recognizing these phases, the fixed, the inertial trade, responsive activities, third segment, you can see where the market is likely to go next without having to predict it. You are simply recognizing patterns that have repeated for over a century, patterns most traders never see because they're too busy projecting onto the chart. The second key element of W free flow is context alignment across time frames. Most traders look at a single time frame, for example 15-minute chart, and try to make decisions from limited information. This creates uncertainty which triggers all the psychological barriers we already talked about. In the W free flow system, we align multiple time frames, the weekly auction, daily auction, hourly auction, 15-minute auction, to see the complete context. And then Aligning it all together, we move to the 1 minute time frame chart and take our trades. What appears random on one time frame becomes inevitable when all time frames are considered. The multi-time frame context eliminates the uncertainty that drives bad behavior. It shows you exactly where you are in the larger market structure. And when you know exactly where you are, your psychological issues begin to dissolve naturally. Just now, I have shown you the 8 psychological barriers that keep most traders trapped in cycles of hope and disappointment. I have shown you why working directly on psychology is often ineffective because you can't fix your psychology while you are still identifying with it. And I've shown you the alternative. Developing structural awareness so clear that your psychological barriers naturally fade into the background, okay? And this is the essence of the W free flow system. And believe me, it's not just another trading strategy, it's a comprehensive approach that addresses both the market structure and your psychological structure. Both the market structure and your psychological structure. Your trading results are a perfect reflection of your current level of structural awareness. Change that awareness and everything else follows. Your psychology, your execution, your profitability. The question now is, will you continue trying to fix your psychology while trading the same way? Or will you develop the structural awareness that makes psychological issues irrelevant? The choice is yours. But remember, the definition of insanity is doing the same thing over and over again and expecting different results. If you have been struggling for months or years using the same approach, perhaps it's time to consider that the solution is not more psychology, more discipline, more meditation, more rules, more trading plans, more indicators. Maybe it's developing the structural awareness I'm talking about that allows you to see the market as it truly is, not as your projections make it appear to be. This is the path to trading freedom, and that's what the W free flow system offers. Thank you for watching. If you are ready to go deeper into the structural awareness, go to my educational playlist and watch all the videos I publish there. Now take care of yourself and your family. Stay profitable. See you in the next video.